Good afternoon, everyone. Today I'm chatting with Peter Grandich. In today's interview, we get into the tariffs and the trade war that's going on between Donald Trump and pretty much the entire world. We also get into the recent volume pickup in Canadian junior stocks and whether this is a sign of good things to come. And Peter gives us a breakdown of some of the stocks that he is most heavily invested in. All right, everybody, enjoy the interview. Peter, it's nice to see you again.
Always a pleasure to speak to you, my friend. I always enjoy our conversations, both on and off the air.
So first, I got to bring up everything that's happening in the world. We've got Trump. He's had this on again, off again tariff policy that I think that they say that it's been rolled out in an incoherent way would be a fair statement. On that same token, we have seen some big announcements of manufacturing that is happening in the U.S. Also, we've seen some announcements that manufacturing is shutting down in the U.S. So the policy it's messy. We're seeing some instances of it working, others of it kind of doing the opposite of what it's supposed to do. I'm curious here, as you consume the media that you consume and you analyze your thoughts, what's going on in your head right now when you're thinking about everything that's happening with these tariffs?
Sure. So to set the stage, it's important to recognize that a few years ago, long before Trump even got elected again, I made the decision that what was happening on the world trade front was net negative for the United States and net positive for those that are going to be part of the new and growing organization called the BRICS. And a side note from that was one of the main reasons that I stayed so bullish on gold, because I believe they were moving towards an accumulating gold, because when they got to their proper size, they were going to use gold in some form in how to trade with expanding partners that were coming in. So I was already betting on de-dollarization, the United States losing its world economic prowess. And I have to tell you, the moment, and this was even a few weeks before he announced the tariff move, when he made his announcement about that anybody in the BRICS who trade again and don't trade with the United States, he was basically going to break their kneecaps. I wrote that this is going to come back to bite him. This is not the way strong arming people into this. And when you get Canadians, and I know I'm speaking to one, who in all the years I've ever dealt with any Canadian, never the slightest, oh, I can't stand you Americans or you Pete and all. No nicer people had ever been to the United States. You can go on either side of the border, not even know that you even crossed the border many times. And when you get Canadians booing Americans because a guy basically says, "Oh, I'm just going to make you another state of ours," he's just gone about it all wrong. Now, I'm not an anti-Trumpster, Steve. I'm not a magnet either, and so I get it from both sides. Both sides don't like me because I'm not fully on their side. But I think the net of this is who's ever in charge of new membership at the BRICS wants to send them a Christmas present already, because he made marketing for the BRICS easier than harder.
It's funny you say that because I actually did a video essay last week about the BRICS, and I brought up a tweet that you made a year ago. I'll send it to you afterwards so you can watch it. And maybe we could post a link below this where we talk about what's happening with the BRICS, and that's exactly it. It seems like but that Trump has opened the door to this policy happening, and like it may have been kind of fringy, and there might have been a little bit of resilience before, but when he's coming out and using the language that he's using, I'm sure that a lot of these countries are just looking at him going, okay, well then screw you. We were on the fence before, but if this is how you want to play it, it's 100% happening now.
Steve, there's two keys. First, the Canadian US relationship, two biggest trading partners, never any animosity. I've talked for years to you and others about the best movie to watch about our relationship was Canadian Bacon, because it made fun of both sides and it realized how important we were to each other. But the news of South Korea, Japan, and China formally meeting and willing to speak about approving their trading, if you know the animosity that goes back between China and Japan alone, the very fact that this motivated them to do this is a clear signal that at the end of the day, this is going to be a negative for America, no matter how they sell it or try to, spin it at this point in time.
Yeah, and we're seeing it in the price of gold. Goldman Sachs, I think, came out with the target that we could see $4,000 gold this year. We're seeing more and more headlines. It's still not really that much of a talking point on CNBC. I think that they still would rather talk about Bitcoin. How much more life do you think that gold has in it this year? Do you think that we're going to sit around that $3,200 level, or you think that we're going to be crushing $4,000 by the end of the year?
Well, Tout TV, which I call CNBC, doesn't have really any advertisers of gold, but it has a bunch of crypto advertisers. So don't expect that to change. Second of all, the financial service industry, at least in the US, treats gold as kryptonite. They've done it for as long as I've been in this industry, and I don't expect them to change. So I would be really concerned if we were turning on CNBC and every few minutes they had a guy talking positive about gold. That would probably move me more to the exit than want to buy more. But I think the important thing is to take a step back and understand a couple of things. I'm singing to the choir when I say this, but for others that may not recognize this, think about this. In the last 25 years, or since January 1st, 2000, gold has greatly, not just snuck by, but greatly outperformed equities and bonds. So you would think financial advisors, who people go to be the experts, would have clients, at least here in the US, I don't know about Canada, having real ownership somehow of gold. And yet the average portfolio is estimated to has less than 1% exposure to the gold market in the US. I like to ask those clients, to ask their advisors, how come you missed it? How come we don't have the best? You got me loaded up on stocks and bonds. Okay, I understand your arguments there. How come I don't own any gold? And part of that reason has always been is they can't churn it, burn it, flip it, make it 8 different things, collect all sorts of money on it, and it's no one else's liability. That's the other problem, that they've always had with it. And so what happened in that time, Steve? We've seen central banks go from very aggressive net sellers to huge buyers, to the point of numbers no one can even believe still at this point. And 33 separate countries repatriate their gold from the US and London for what? Not a trade, Steve. Who do they flip it to? They're not buying it because one day they hope to sell it and make money on it. They're buying it for a purpose. And the purpose has always been, in my view, surrounded regarding the BRICS, that these countries realize sometime in the future, because of all the indebtedness in the world, and particularly in the world's current reserve currency, gold is going to have to be used in some form to get them out of the mess. And so whether or not it has 500 correction in it or another 500 run up before correction, the important thing to recognize is there's nothing in a fundamental argument other than maybe technical overbought to say that gold has reached its ultimate peak here. And can I make one other comment, Steve? I hate to be dragging on here, but this is important. So when I entered the business in the early 1980s, the stock market, the Dow had gone for like 12 years, just between 700 and 1,000. Interest rates were 20%. Inflation was double digit. We were about to have a war any day with the Russians. Japanese were taking over the world at that time, not the Chinese. And we were so poorly viewed about equities that Business Week ran a famous front cover magazine that said equities are dead. The stock market will never really get past 1,000. And some unknown young guy came out of Gainesville, Georgia, named Robert Prechter Jr., and predicted 3,600 on the Dow Jones Industrial Average through a technical analysis program that no one really knew about, Elliott wave theory at the time. And I remember people scoffing about him, even on Wall Street Week at the time. Who does this kid know? Doesn't he know the Dow really doesn't go above 1,000? Well, not only did it get to 3,600, Steve, it got to 10 times more than that. And why I bring that up, and I'm not saying gold's going to 36,000, but I think it would be a mistake to think that gold always should just trade between this price and this price. And so I don't think there's a magical number to say, other than the faster we get to higher numbers, the more likelihood more troubles exist in the world, not less troubles.
So I'm just pulling this up right now. This is the return of some of the big gold producers. Newmont's up 43% over the last 1 year. Barrick's up 18% over the last year. Franco Nevada's up about 48% over the last year. Of course, there's been some wonkiness there with Cobre Panama. Um, then we have Kinross is up 129%. I can keep going. So we're seeing capital flow into the majors. It's clear. Those are big returns. The question becomes how does this trickle down, and at what point does it actually start to pour into some of the exploration names that both you and I often talk about and are in?
Congratulations, Steve. You're the 1 millionth person that asked me when are the junior stocks coming around. So I don't know what prize, but we have to give you something. So let's look at what's transpired here. The metals have clearly moved, not just gold. And as much as silver's lagging, I've actually turned bullish on silver, and that's news in itself for someone that used to call it like kissing your sister. But look how strong copper is acting. So the metals themselves are clearly in a major bull run with no sign of ending. Now, as you pointed out, some of the biggest producers are really starting to move, even though they're still quite underpriced compared to where they've been before versus the price of gold. But they're going to have something very interesting happen for them, Steve. So it's going to be hard pressed to see earnings growth in the U.S. stock market this year in general industries. At best, they'll be break even. Many people are already starting to ratchet down because we're seeing a general weakness happening. And this tariff situation is making businesses just stop. I have a lot of small to mid-sized business clients from our planning group, and they all have their hands on the side. They don't know what to do, and they're not about to do anything till things become more clear. So we're going to have weaker earnings expectations here in the U.S. But suddenly these generalists are going to, and remember, most money managers are followers, not leaders. Okay. There's a herd mentality, just on professionals, just like there is in retail. And suddenly they're going to look quarter after quarter. Look at these gold. What's this Agno Eagle? Look at their free cash flows at unbelievable records. So the generalists are starting to get attracted normally that don't participate in the majors. Now the question is, how does that reach down to where you and I like to live in the low end of the totem pole, the junior resource companies? Well, a couple of ways. I don't think it's going to be outright acquisitions. I think the smart thing that the majors are doing, and we're starting to see it now, is they're reaching down to the mid-sized producers or something that's very advanced but may need several billion to really make it a world-class project. But what they're starting to do is they're starting to make strategic relations. They're starting to make investments into the juniors. And I think that's the way the juniors are going to get lifted. Keep this in mind, and I know I'm singing to the choir. Three things have killed the junior market. One, crypto. That's like it or not, even though the NFTs have all blown up, it's only a matter of time to all the mem coins blow up because you'd rather have doo-doo than a mem coin because at least the doo-doo could be turned into fertilizer. You can't do anything at a mem coin except look at it. But even the crypto market is maturing, at least, and going to go through a phase where a lot of them are going to be shaken out. And there'll be survivors, and they'll be like the dot-com survivors. But you also had less players in that market. You've been around enough to know that there's less institutional interest. There's less mining interest. There's no longer financial advisors building a book of business around juniors because the commission thing is done. It's been, and of course, regulatory has been challenging. So when you're not in an ETF, especially now, yeah, it's nice to see the GDXJ and go up and say, look, it involves some juniors. Look at them going up. But if you're not an exchange traded fund, it's almost impossible to get an institutional interest. And to tell you how challenging it is, and this is important for Canadians to understand, we have discount brokers in the US that won't even allow you to buy an OTC listed Canadian traded exchange junior, even unsolicited, because they've categorized it as, too much risk. So it's still a challenge in the junior market, but we're seeing the lift. And where we're seeing the lift, we're seeing volume return. And more importantly, last week, when think about this, what happened. It's the first time I ever remember this, Steve. The stock market was down hard. Bonds were down hard at the same time, and the dollar, while gold went up 100. But even when that reversed and gold went down, the juniors didn't go down. and we're seeing increased volume. So it's a trickle. It's not going to be a mad rush, and it isn't going to be just acquisitions galore, but we're starting to see anything more than moose pasture starting to get real bids.
It's very exciting to hear you say that because I feel like since I've known you, at least probably since we'll say the summer of 2021, where we peaked out there in Feb 2021, and then right around the summer, we were we noticed everything had pulled back quite a bit in the junior space. A lot of the names that did get that big run in 2021 were mostly, let's not kid ourselves, it was mostly sort of those tech names. It's been a rough few years, to say the least, and it sounds like you're now feeling a lot more positive about things, and you're feeling like it's coming. It's coming. You're noticing it in the volume. It started, and from my viewpoint, what I notice that happens is that when the majors run like this, they've got institutional investors and analysts and retail shareholders all asking, "Okay, this is great, but how do we supercharge this thing? Look at your resources. They're depleting." And they start to get freaked out because they know that there's a lot of capital coming their way. They have to deploy it. And they look one level down and they look at those second tier companies and they say, these are the ones that we want because we want to add those reserves onto our investor deck. And then that ends up putting a whole bunch of cash into the hands of the investors of those second tier companies as they start to make acquisitions. And then many of those people end up going and they put and end up putting names into the whole exploration space. And I know for a fact that one of the biggest names in mining investing had that exact thing happen to him in 2021. I'm not gonna say the name, but people can probably figure it out. He sold his shares of a major after an acquisition, and he ended up plowing about, we'll say, I don't know, 2 or 300 million dollars of capital in the exploration names across the board, and you'd see his name on many of the news releases when these financings were announced. So I think that you're right. We are seeing that uptick in volume, but also we're starting to see that capital flow into the majors, and from my viewpoint, that's how it works.
So this past Monday, just 24 hours ago, I put out a report that said our day has come. And that is what, the feeling that all the finally 2 or 3 years later than some of us had expected and hoped for, that market is set to move. I think the other reason you're seeing it is when I talk to some of the juniors that have really advanced themselves. My largest personal holding, and I don't like to do these interviews and plugs, but I'll just bring it up as an example because it is a prime example. A company called North Isle Copper and Gold has made major advancements on the corporate front. They've seen their stock go up and all. And when you talk to management, they will tell you that in recent weeks, so many more different types of people are knocking on the door, not just corporates, but major investors, funds that normally don't even look in that area. Those are the type of signals. And as you start to hear it from others, not just one or two, suggests that we're moving very much in the right direction. Now, part of that also that will help is we don't want the stock market to crash because we want people to roll out of one and into another. And if the market comes down too hard, too fast, you're not going to get this type of call to a financial advisor. Hey, sell my Nevia, sell my U.S. Treasuries, but buy me some junior resource stock. It's not going to take place that way. And so it's important that these things kind of roll over and kind of slow down the momentum. We're seeing that even in the Bitcoin. We're starting to see some people that were raving bulls about it starting to say, whoa, whoa, maybe this thing isn't going to a trillion like their snake oil salesman of all snake oil salesmen now is up to. Now it's trillions it's going to. And they can't move that market anymore. So let's just say this, as we sit and talk today, it's probably the best shape it's been in since that period of 2020, 21.
Well, you look at Newmont, just to take them as an example, they did $1.6 billion dollars in free cash flow last quarter. Okay, if we annualize that at 4 times, that takes us to over $6 billion. They traded a market cap of 62 billion. So That's when you multiply that out, that's a little bit less than 10 times free cash flow. Well, the price of gold has ripped up probably $400 since last quarter. So if we annualize the last quarter or this upcoming quarter based on that price movement in gold, now what's it trading at? Is it now trading at 8 times free cash flow? And we talk about the stock, it's up 43% over the last 1 year. But as we see the free cash flow continue to take off and we look at the valuation that really hasn't moved that much, I think that the majors still have quite a piece to go. And it's only a matter of time until this whole thing trickles down. And you've been doing this a lot longer than I have. Almost every time we have these rallies, things tend to overshoot. And you mentioned silver. My understanding is that every time gold rips, silver comes right back after acting like a drunken frat boy who can't help himself and just goes, you know, 3 times higher. I don't know the exact metrics, but it usually the term that I like to use it overshoots. So in saying that, are there any gold names or silver names that you want to bring up that you're particularly bullish on and you think that are worth mentioning?
So let me first close the majors by pointing out not only are you correct about how much the gold price has gone up in that time, but look at the single biggest cost to a producer, oil, how it's gone down. So that'll also add to their bottom line as well. And I suspect that labor costs will at best stay the same, if not also come off as well. So the majors are just set to be, print money for the next several quarters. In terms of silver, I used to get in trouble for years, if not decades. When I was bullish on gold and asking about silver, I would say it's like kissing your sister, and the silver bugs would just rip me, apart. But about 2 weeks ago, I concluded, especially after listening to one or two very smart people that I concluded are even smarter than I am when it comes to that area, clearly identify that the market is being held back on purpose at certain levels. And I've learned that sooner or later, when anything is manipulated like that, it gets overrun. And when it does, it makes up for lost time. And then the fact that the ratio had gotten to the level that it's gotten to now. And one of the reasons that it did, like you just said, it did in the past, is because the public comes in. And when the public comes in, uh, there's no stopping them. And public tends to like lower price quantity versus quality. They rather buy $3,200 worth of silver than $3,200 worth of gold at this point in time. So that was the other reason. In terms of companies, I'll just say that I've just talked about them on my things. I've never go on these interviews and talk about them. I'll mention my three largest holdings, but they work for me. They may not work for somebody else. My largest is North Isle Copper and Gold. That is the 1 in 1,000. I think that's the dream stock that I waited decades for. And of course, that's why it became my number one. My number two is something that 2 years ago I might have said the same similar thing, but management has been extremely disappointing on the marketing IR side, but they still have phenomenal projects, and that's Arizona Metals. And then the third is a company in an area that I love in Canada. It's operating in Quebec and also through a subsidiary in Ontario, and that's Northern Superior. And there, a camp is being developed where I Am Gold and them are the major two players. And eventually, someday, somehow, those two companies need to combine to make that one big player in that camp. And I think the stock could be worth a lot more than it currently is. But there's a whole host of others, and I'm certain you have them as well. I think the important thing to understand is if ever the juniors were to go, all the ducks have finally lined up. There's nothing to point to major to say why they shouldn't. And we're seeing that in the volume now. Just look at anything. Now, listen, there's probably several hundred juniors that shouldn't exist, Steve. They basically exist because they're lifestyle companies for the guy or gal that's running it. They're surviving, by, with no real assets, do a little private placements and all. And it'd be better that they were gone so there'd be just less and more focus on the better companies. But we're seeing volume increase across the board. If you've been following any company in the last year or two, chances are average daily volume is doubled than it was a year or so ago. And that's important. Remember this, volume always precedes price in a bull market. Price doesn't first go up and then volume comes in. Volume comes in because of the last of the sellers or people that are just glad it went back up a little just to get back out or close to even, while the new people are willing to buy but not yet ready to totally chase it. And so volumes on unchanged days isn't bad, especially in a stock that had already moved a lot, because that's a change of ownership and a consolidation that the company needs.
All right. Well, Peter, thanks very much for hopping on today. If our audience wants more of your commentary, where should they go to?
Well, the best place is my X page, because that's where anything I'm going to say, even if I make a video or put up a beautiful interview like this, is keep almost ready to say Twitter again, but X. There is petergrandich.com that explains the business I'm involved in here in the States, and then I have a YouTube channel where I interview people, including yourself, and we didn't talk anything about sports today.
Well, you're right, and I forgot to ask you that. Let's finish on that note. What's the
Stanley Cup playoffs are
yeah?
coming up.
Who's
Single bet time of year for me.
who's gonna win the cup this year?
Well, who's going to win and who I'm rooting for? Two different people. I'm a big New Jersey Devil fan.
The Devils.
I've worked with them, but I doubt very much they're going to be the Stanley Cup champion this year. I am hoping that the Canadians actually make it, the Montreal Canadiens. They didn't make it yet. I think they clinched a tie. I'm not certain where it's at. They have one, and the Columbus Jackets have a game in hand with them. But if Montreal wins, and if Montreal plays the Devils somehow in the playoffs, any of my friends from Montreal that are watching this that want to invite me up and take me to the game, I will come, but I will not wear anything American, and I will cheer for the Canadian national anthem and boo the American national anthem. So nobody picks me out of the crowd.
All right. Well, Peter, thanks very much for hopping on here. Let's do this again soon, and I wish you a happy Easter.
Thank you, my friend. God bless you.
All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks for watching, everyone.